things are affected by the price of oil, right? This day and age is a great example of what happens when we have the biggest oil disruption this country has ever seen in its history. And now, can you imagine if the last administration really pushed through their efforts to wean us off fossil fuels and just to put us on wind and solar? Oh, my word. We're watching all the knock-on effects of both good and bad oil policies now. Whether he wants to admit it or not, Kevin Warsh is going to be an oil trader in the short term as he takes his seat at the Fed, and oil will also shape policy on inflationary issues going forward until this Iranian issue is finally put to bed. Now, PPI and CPI should slowly come in, and the 10-year yield will also drift lower. Ultimately, the job market will also be affected by an economy that is heating up with growth prospects well over 4% in GDP. My next guest, he watches all this stuff too, and we wanted his opinion on it. So please welcome to the show, Mr. Patrick Mueller. He's with Bella Advisors. Patrick, thanks for coming on, brother. I appreciate your time. Kind of a big picture, 30, 40,000 foot view of things here. Kevin Warsh, I say this, and I'm going to throw it back to you. I'm not saying he's going to raise rates, but the current environment, I think it makes it near impossible to cut rates. What say you?
It's going to be really interesting to see where he goes because Trump appointing him, Trump has probably told him what he wants him to do with interest rates. Whether he does that or not, we will see. But because he's been pushing Powell like crazy, too late Powell, right? As far as, being too late of dropping the rates. And this puts a serious amount of pressure on Warsh. And he's also an old Wall Street guy. So, I expect him to be aggressive and making moves that people probably don't anticipate him to be making. So I think he's going to be much more aggressive. I think it's going to initially be cautious, but then I see him being much more aggressive moving forward, I think, with rates.
Yeah, okay, so another thing is, I look at the CME Fed Watch tool every now and again, and it kind of tries to game via the markets what the interest rates are going to do or what the possibility of a hike or a cut at the next meeting is they've dropped for the month of June, the possibility of a cut, and now there's a very small possibility of a hike. It's 99% chance they don't do anything. But it's interesting to see the psyche change a little bit. I think the psyche is also coming through in the 4.5% 10-year yield. If we were really well and truly getting our hands, around this inflation problem, I think that's closer to 4%, or we might even put a 3 in front of it. So until I can get really excited about the economy, I'm really excited about earnings, Patrick. I love what the market's been doing. Obviously, how can you not like what we've been doing? But I really still need that 10-year yield to kind of behave before I feel like, okay, this is real. What say you?
I agree with that completely. People aren't paying near as much attention to the bond market and Treasury market as they should. And, oil right now is just going to be such a prerequisite of that. When it comes to what's going to be happening with interest rates, and we've seen gas rates double here in Georgia, and that's not only just affecting us at the gas pumps and people's pockets at the gas pumps, but it's affecting everything that we consume. So when we see that the last few years, the last 4 or 5 years, the price of everything has really doubled. And like the real rate of inflation is, to me is tremendously more than what the government tells us the real rate of inflation is on stuff. And you get to see it at the pocketbook. I go to buy tacos, Scott, for Taco Tuesday yesterday. And seriously, it cost me like $70-something, just for taco stuff, right? This is beef. And sorry to say this, right? The cow guy, right? Big fan of the beef. All right.
Yep.
But it's really eating everything up.
You're right.
So all that stuff.
I'll throw on top of that. I agree with you. I agree. 100%. Go ahead. Sorry.
No, you're fine. So when it comes to all of this stuff and the real rates, until the gas prices and oil prices start coming down, I don't think we're going to see those Treasury rates coming down either anytime soon.
And it's not helping that we're spending a lot of money on a daily basis in the Middle East as well. Our debts and our deficits, we really haven't got anybody that looks as though they've got any real teeth to get their teeth into the problem. And I know that we're trying to tackle waste, fraud, and abuse, but when it comes to spending $2 trillion more every year than we actually bring in taxes, we got to find a lot of waste, fraud, and abuse to kind of balance that out, don't we?
No kidding. And I'm all for getting rid of the waste, fraud, and abuse. I'm even more for people actually being held accountable for all of the abuse and fraud and everything that's out there, because it just seems like nobody ever gets held accountable for anything, right? That happens. So I would love to see a day when we actually start seeing that and real changes happening. But the debt is a real problem. I mean, and at some point, somebody's got to pay for all this. The government doesn't make money; they only take it from taxpayers. So we've, over the last 5 years, we've seen 15 trillion in new debt, and we're knocking on the door of $40 trillion in debt. At some point, somebody's got to pay for this, and so how we're going to see tax rates moving forward is going to be a big question.
Well, it's going to be hard for them to go drastically lower. And I also think, before we go here today, I'm going to say I think that the Fed is going to give a lot of lip service to inflation, but they're not going to be as against it as much as you want them to be, because they need to inflate their way out of this debt. So Kevin Warsh will maybe cut some rates here down the road. I don't think he can now. Keep inflation running a little bit hot, let it go, help that, try to help us with our debt, find some waste, fraud, and abuse, and try whatever they can to make this, balance our books. Because right now, it's not a pretty situation. I'll give you the last 10 seconds before we got to go.
I completely agree with that. I mean, he's got a lot of tough decisions to start making, and he definitely doesn't want to make the wrong decision just getting off to the start here at the Fed. But I expect him to be aggressive. I expect him to be aggressive, but we'll see what happens. Time will tell here, Scott.
Right, I agree. Thanks for being on, Patrick. Because if he makes the wrong decision now, that's a long 4-year term. If President Trump's two of those years of Trump's going to be over your shoulder. Thanks for coming on, brother. Patrick Mueller. He's with Bell Advisors, Atlanta, Georgia. Thanks for coming on.